Hello everyone, Godre here, and this is my money brief. On today's money brief, I want to talk about something that happened towards the end of last week. In fact, it happened on Friday. The U.S. Fed, that's the U.S. equivalent of the central bank, their Fed chair, Jay Powell, made a very important announcement over during the week. It was a much anticipated speech, and I'm sure you're wondering how does that concern us. Okay, so just chill. Can I explain? At the speech which he held at Jackson, it's called the Jackson Hole Summit, he made a much anticipated remark about interest rates. So for those of you who may not know, the U.S. has had ultra high interest rates since 2020, since towards the end of 2020, just after COVID, and that's because of inflation rate. So because inflation rate is high in the U.S., they raised interest rates just to contain inflation. So it's been high for some years, and so now that hike in interest rate has sort of heated the U.S. economy. Like their job numbers have gone up, even though there was a major revision during the week. The economy seems to be booming in quotes. People are now saying, you know what, it's time to slow down because if you keep interest rates that high, then they might end up in a recession because a lot of those hot economy that they've had seems to be cooling off, and so it's time to drop interest rates so that businesses can start to start business all over again because you sort of slowed them down, and that's basically just how economics works. So he made a resounding speech, and in that speech he gave the clearest indication yet that the US will raise interest rates. I think interest rate will drop interest rates. So I think interest rate is probably around 5% plus or so in the US, and so he wants to reduce it. Now, this also falls in line with several central bank governors in the West. I think the UK as well has also signaled, EU has signaled, Japan has signaled that they're going to start reducing interest rates, or at least then we're not going to see those hawkish interest rates that we've had for some years now, and so that essentially just sent the market in a frenzy because they were all happy. Investors are all happy that finally we're going to see interest rates go down. You know what it means when interest rates goes down? It means people can borrow more, isn't it? And when people borrow more, it means they can invest more, they can spend more, and all that. So it's a signal because essentially borrowing cost is going to reduce now in the US, and so you're going to see people now being able to acquire a lot more assets. And you're wondering, I guess, how does this affect you now? Like, what's this got to do with Nigeria? A lot. A whole lot, a whole lot. So when interest rate goes up, foreign investor inflow leaves emerging and frontier economies like Nigeria. There's no point because think about it. If interest rate in the US is 5%, that's the Fed rate. What's the point buying any Nigerian asset? Even if Nigerian asset is going for 10%. By the time you remove the risk, right, then it falls to maybe 7%. The premium is not much. And so what happened between 2020 and 2021 and 2022 and even to recent is that most foreign investors just stopped investing in frontier markets like Nigeria. They just moved all their money away. And so that was one of the reasons why we had the exchange rate pressure that we've all been suffering for some years now. And so if you recall in some of my previous money briefs, I've said that one of the signals that you must check to know whether the exchange rate is going to be stable is when the US decides to reduce interest rates. So that has happened, or that is happening. In fact, the gist is that they might reduce that interest rate by September, as early as September, when the U.S. Fed, executive or governors or whatever they call them meets. Nigeria is called, governors, MPC. When their own equivalent of the MPC meets, they would likely cut rates. Might be slight, might be not that much, might be maybe 0.5% or 0.25%, but at least they'll start cutting rates. And when that happens, that sends a very strong signal that foreign investor outflow from the US to other parts of the world will jumpstart. So what does it mean for us? In 2019, 2018, for some context, we saw capital importation in Nigeria average about between 2018 and 2020. Just the first quarter before COVID, capital importation was averaging $5 billion a quarter in Nigeria. That's the total amount of forex that comes into this country. $5 billion a quarter. Of course, in some quarters it was 8, in some it was 3. So if you saw like average, it was about $5 billion. And since COVID, it's been like $1 billion per quarter. So you can see. So no surprises that we have this exchange rate pressure. Why did Naira kind of depreciated fast? Because we weren't seeing that money come in. So the highest foreign capital importation that we've seen since COVID actually happened the first quarter of this year, and that was about almost $4 billion. And that was a shock because I guess a lot of the CBN policies to raise interest rates also attracted some foreign investor inflow. So we saw, an uptick in capital importation. So if they do raise that interest rate, the prognosis is that you're going to see capital inflow into Nigeria. Now to the main question. What does that mean for your dollars? Should you be selling your dollars, or should you even be buying dollars, or should you be keeping Naira? I think for now, this year, as much as this is a good signal, I don't think it's enough reason to be completely happy or to think that maybe it's time to maybe offload your dollars and keep Naira. If you have dollars, I'll suggest you keep them. If you have dollar obligations, I suggest you keep acquiring. I don't think you're going to see any immediate impact on the exchange rate. And when I mean impact, I mean significant impact. Like maybe you see a huge strengthening of the exchange rate. I doubt it. And that's because these cuts are going to come slowly. So it's not like they're going to come quickly. And when the outflows come, it's going to take time. It's probably going to go to some other markets. Nigeria is not the only market in need of dollars. So it's going to go to some other competing markets before it starts to get here. So I think it's going to take a while. Of course, there are a number of things that the Central Bank of Nigeria is doing that is also aiding the fast track of FX inflow into the country. So yes, I take cognizance of that. What you could likely see between now and the end of the year is some kind of FX stability, which is good. We've been having FX stability for some months now. What do I mean? The exchange rate has been between 1.5 and 1.6. It's been oscillating around that, and that's really stable. Do I think it's going to fall to 1.3, 1.2? I doubt it. I don't think it's going to happen this year. In fact, some are projecting it might even hit 2K. I'm not in that class. I don't think it will hit 2K. August, September, October is usually very tight for the exchange rate. Historically, at least over the last 5 years, we tend to see a bit of depreciation. So that is why I'll suggest keep your FX and let us wait and see. It's still going to be September before the Fed meets, and even when they cut those rates, you're not going to see the impact immediately. So I would suggest that you keep what you have. If you absolutely need to buy. If you're into speculating, well, you better start checking what you're doing, because the currency might move against you. In fact, the dollar has been weakening globally. It's just that it's not yet affecting us here. We're not enjoying it here in Nigeria yet. So if you're a forex speculator, you better be careful, because you might get your fingers burnt. So that is my money brief for today, and that is what I wanted to explain. And I hope I did, sort of break this thing down for you. If you got further questions, you know what to do. Just drop a comment. Follow us on any of your social media platforms at Nairametrics. And of course, don't miss my weekly podcast, Follow the Money, on any podcast platforms. Do have a profitable week ahead.